So just to start this out here, we're going to be going into the Fib training. All right, I'm going to show you guys how to use the Fibonacci just in general. And then for all the new viewers, this is how I do it. These are my settings, okay? This is the Fibonacci retracement tool right here, okay? And these are the levels I'm using. The 0.5, so the 50%, the 618, 61.8%, 66%, and 78.6%, okay? So there we go. This is how the settings are going to get set up. You set it. These are the 4 levels you're going to use in the lower time frame. Okay. If you want to learn about the higher time frame, go check out the video that I already have done. Okay. So these are the levels. So this is why the Fibonacci works. It works because all we're doing is waiting for a percentage return to get a better entry. And in order to have a good balanced leg as it goes up like this, we want to see it pull down about 50%, at least. The reason why we need 50% like this is because in order to have a buy contract, there needs to be sellers. In order to have sell contracts, there needs to be buyers. So if we have 1,000 going up and we only pull back 500, that gives us move back to the upside. Because now we have at least pulled back and there's buyers willing to buy and sellers willing to sell at a higher price, premium discount, okay? That's basics of market structure, all right? Low, high, lower, low, higher, high, okay? And when we're targeting this, we're setting our Fibonacci with the percentage. So if this is going up, I'm looking for a bullish retracement to the upside. So I'm gonna look for this to pull back at least 50% or greater before taking my entry. All right, so say I'm going to fib it from the bottom of that leg to the top. I always put my fib in the wrong direction. It doesn't matter if you put it from low to high or high to low. If you fuck up, just go like this, hit reverse like that, and boom, it's in the right spot. And notice how I mystically knew exactly where 66% is, like I have it like second nature. Because that's the golden pocket. And that's really funny that I got that so perfectly. All right, but this right here is the optimum entry zone, the golden pocket. Like that's the #1 place for a retracement, okay? However, you need to know where the 50% is at, because for me, if we have gone up and retraced 50% at least, that means we've gone up, we pulled back more than 50%, or at least to the 50%, then I consider that leg balanced. And if it's balanced, we don't have to worry about a rebalance, right? If it's imbalanced, that's when you're going to get a massive rebalance. So if the leg is balanced and it's pulling back to here, then this leg is now good. If I then move up, I'm going to now target this high, move my Fibonacci to the next point. Here's the low on this one, to the high on this one, and play the continuation leg again to then get another 60% retracement to continue to the upside. Okay? And this is how you're going to play it. You literally just keep fibbing out each leg as they go. Now, if you get a shallow leg that has a shallow return like this, let me just move to the left. So you got it stopped right there, and then did one of these. Now you have no retracement. Because you have no retracement, I'm going to go from high to low, and look at this. It did not give me a 50% retracement. So in my opinion, this leg is imbalanced, and because it's imbalanced, that means it's going to come back hard later in the future to then sweep these liquidities right here to then continue the trend move to the upside. And this becomes a great place to take an 8++ trade setup. Because if this does happen and it continues to the upside parabolically without actually pulling back, and when I say pull back, it has to be after the point of this. So after this, even though we're in the 50% now, that's irrelevant. What matters is it pulls back to the 50% or more after the pullback comes back down. Okay? Not here. So that's been one of the bigger confusions, okay? Right. So this is how you fib that out. If it keeps going to the upside, you keep fibbing it out, fibbing it out. It keeps going parabolically to the upside, 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 upside like that, or whatever. Or maybe let's say if it was like right here, for example, and it stopped right there. Okay. Then this gives me another 8+ entry setup here, because I would literally be looking for a potential move that goes like this. That break of structure is this line, which people are going to think of a break of structure, but they're not. It's actually a liquidity sweep. To sweep lower, sweep out this liquidity, sweep to discount, to then push up to make a bigger leg up again, and then start this move again, trending back upward with balance until we have more imbalance. All right. So that's what you're looking for. And this is how you kind of adjust your fib, right? That's how you can deal with things that just don't make sense. Okay? So now you just got to consider, well, where's the low, where's the high, where's the low, where's the high, where's the low, where's the high, and you need to get that correctly. So you need to understand time frames too when you're fibbing. If you're just fibbing out legs in the 1 minute, you're going to lose a lot more. If you want to catch big moves, you should be looking at generally 5-minute higher highs and lows and 15-minute higher highs and higher lows. You can't forget that. Because, for example, say for example, you don't get a pullback, right? Like you don't actually get a balanced leg pullback at all as it's going up. It might just come and humble you, okay? But I can see extremely clean, extremely clean, extremely clean. We probably would have caught a 786 short down to the downside continuously just from this trending move downward. But you see how far I'm zoomed out right now? This is on the hourly actually right now. So these are hourly legs that I could have literally fibbed out like this, low to high. All right, that's the wrong way. Okay, I fucked that up. High to low in this case. And then do a fib retracement, right? From the bottom of this leg to the top of this leg here. And then boom, 786 perfect entry to go short and take it down back to here. Then I could have did that shit again, right here. High to low, the high of that one to the low of that one. 618 golden pocket tracement, straight back down at the break of structure, TP1. And then you can let your runner go a little lower if you want to. But if you want a higher probability of success, you should be TPing slightly before the low of the last one, in the event it puts in a lower high. Okay? So just as an example here, this is NQ. If you guys were looking at the hourly and you did then wick yourself in, for example, over here, these moves are massive because I'm on a much higher time frame. You would have literally caught it from the bottom of there to the top of there, which is 1,000 points. That's 1,000 points on NQ. Okay? So this is how the fib plays out in the greater time frame. I was only here and I forgot I was there. So there's your example one. So this is greater time frame market structure. What you guys are trading are the movements in between. All right? But to me, this is pretty damn clear. I could literally put a fucking trend line from here. I could pretty see a bunch of equal high peaks right here that literally moved in a very specific momentum direction right here. I can almost guarantee that every single time it's around here, it's at a particular liquidity sweep time. Look, 9:30, that's New York Open. Right there, this is, what time is that? That is close of business, power hour, market on close. And you can literally just see, okay, this is keeping me within trend in a particular direction. Okay, so this is just basic market analysis that we're doing right now so you understand which way you're going. How do you know when to use the golden pocket versus the other levels? So Justin, with my strategy, the way I play it, I will never take any trade at 50%. I want it to pull back into the 50%. Oh, no, I say that wrong. I will never take a trade at 50% unless I have a lot of high confidence that tells me it could bounce there. Now, if I take it at 50% or like above the 50%, I will never take any trade above that, okay? Because if you take a trade that is above here, that's here to here, you are what do we call liquidity, okay? You're the liquidity that's going to get swept out before it pulls up. Here, do this. Put some little text on the screen for you right here. This, if you enter here, you are liquidity. Okay? This means that if you enter anywhere between the 0 to 50, I mean, you can enter slightly above the 50, but if you enter anywhere above, like say here to here, you are going to be the liquidity that's going to get swept out before we push up to the next leg. That is how this shit works. You know how often you guys are entering in trades thinking you're in a good spot because you think the pullback was enough? Do you think it actually retraced 50% of the leg at least? No, you did not. You probably entered FOMOing into it after it did one leg down, you're probably sitting at like 30% of the move. Then it comes back up and then it sweeps your ass down as it comes lower, right? I'm pretty sure that's happened to every single person in here. Yeah. No, it doesn't matter. As long as you have the percentages there, it'll put it in the right spot, okay? If you enter here, you're liquidity. I don't enter here. If you enter here, it's valid, right? So right here, at 50% pullback, it's now valid. This is a valid pullback right here. Okay. Now, if you have something that will support you in your disposition that you believe it's going to keep going in that trending direction, then you can then take this and say, okay, well, I got key levels sitting right here in the perfect retracement in the 618 golden pocket, which is the highest probability chance the highest reversal probability area you're ever going to find. So better entry is here. And I'd be setting a limit like that to enter here, maybe, to wick me into that if I had a key level, right? That's how I'd be playing this, okay? I would never do it here unless there's another key level, because what if it sweeps to here? Or if it's in discount, it comes cut to here, like this, okay? But the way that you're going to do this is, if you want to have the safest part, to have a very, very safe leg or a very safe stop loss position, you need to be below the low of the previous leg. So if you entered in right here like this, for example, you need to be below the leg over here, right there. See this? You're going to be entering. If you got wicked in there, you would be stop loss below that low, and your take profit is going to be at the high here. So TP1 is going to be at the high of the current leg. And then if the leg does continue up in a bullish manner, you can then take a TP2. Now, if you know you entered at the bottom of a greater time frame move, then you're not going to sit there closing your shit out, because now you know that your stop loss is literally just chilling like this at the lower low of a greater time frame move, knowing that your shit's protected as this thing just goes straight to the upside. And you can just let that shit run and let it keep going as it goes. Okay, so this is how you catch the big move, right? And so just like I showed on NQ when we bottom ticked that move, it was in a perfect spot for me that I knew that we're good. We're fucking good. I know the moment we bounced from that shit, we were going bullish the entire time. Okay? So that's how you can play this out. You don't have to exit there if you know where you're at in the greater time frame. If you just bottom tick the 4-hour lower low, like right here, for example, and you know it with confidence, then you can go, oh yeah, this is going up. I know it. Then I'm not gonna bring that. And now I'm just gonna let this shit run and watch it as it does keep trending in my direction, for example. Okay? So this is the general understanding of this part. So does anybody have any questions about what I just discussed before we start actually applying it to the chart? Anything that I just put on here? Oh, and by the way, off these types of entries, I literally bottom tick the market, top tick the market all the time. I will literally go like this, wick myself into where I believe the entry zone is going to be, go like this, stop loss break even, or less with like a 2-point stop loss. And I will literally be taking, even on just like these like the smaller legs, 8 RR, 15 RR trades nonstop. The fib levels are right on the screen, Peachy. They're right here. Like you can literally see it on there. Here. Yeah, if on the 15-minute time frame it shows one trend, but on the 5-minute it shows another trend, do you prioritize the 15-minute? I mean, I'm always hyper aware of the higher time frame. And I will break that for you. I'll break that down for you precise, because we have not done it, yes. And Justin, it does work in a choppy market. It does not have to be in a trending market, because there's always a trend somewhere. There's always a downtrend or a fall trend depending on the time frame you're on. I mean, this should be pretty big, right? You can't look at the percentages. Okay, Peachy, it's in our Discord, so it's in there. I don't want to sit here, because if you can't see it, you know, go on a computer, get on a bigger phone. All right. What if it retraces deeper than 8786? Well, it's getting risky. Okay, it's getting risky. So then, once it starts retracing that deeply, you need to consider to yourself, well, am I looking at the right time frame? Because if it starts going deeper than that, let me get an example. See this? This move is uptrending, right? We got an uptrend. I got a move right here. God, those fucking numbers are massive now. Hold on. Okay. So we got a move right there. 786 wicked into that, goes up, right? So we know we're in an uptrend. Okay, we're doing it again. This is the 1 hour, so it's gonna not retrace the 50% as much, because it does play other levels. See that? No 50%, keep going. Keep going, no 50%, keep going. Going, nothing. Waiting for that pullback to the 50%. Hasn't done it yet. Go to the high, for example, and then boom. What happens? It sweeps out all these motherfuckers right here, and then it wicks into my shit, and then I now go long to take the big move, as it just made all these motherfuckers liquidity. Okay? See that? That's how you don't get faked out, and then you go into this thinking it's going to continue long, and then it just shits through you and just goes straight to the upside. That makes sense? When we fib things out, if you're fibbing out a breakout to the upside, you click on the verse, or is it possible opposite? D1 crash out. Just click the low and click the high of the leg you're trying to go in the direction you're trying to go. Okay? If you're trying to fib a uptrend, you're going to put it from the low to the high of the last leg so that it can then pull back, like I said, from here, low to high of the leg, because I want it to come back to here to take my move. So if it goes low to high, low, high, pull back, go. All right? It doesn't, if I put it in the wrong direction, okay? If I put this in the wrong direction, this is going to be up here like this. Okay? This is obviously not correct. Do I want to enter up here if I think we're going to go long and keep going up? Absolutely not, right? So the moment we know it's in the wrong direction, just flip that shit and put it the other direction like this. Just slap the reverse button. If you click the wrong way, it doesn't matter. I do it all the time. Okay, see? So that's how you do it. You're playing the legs in the direction it's going. But these are the hourly candles, so it does play, but it's like not as granular. Why would you click reverse again? I reversed it back. Okay. Stars. Is a 78% retracement here, or is a 78% retracement at the top of this damn peak over here? It's at the bottom. So I reversed it because it was on the top. Look, I reversed it and it was up there to show her, and then I click again and I reversed it again to put it back down to the bottom. Now, I was showing you guys that it doesn't matter. If you fuck up and don't click low to high or high to low, it doesn't matter. You just need to make sure you get the correct points. The low of the leg and the high of the leg, like this. The high. See this right here? I'm just pushing it to the right. You can see where the line is at to see that I'm just dragging it to the right. Okay? Yes. I trail it and it keeps going up from that low until it rebalances itself after it overextends to the upside like this. And the moment this thing pulls into this 50% level like this, it has now rebalanced itself because it's now lower than 50% to rebalance itself for this parabolic move to the upside. Okay? That's why this just happened. That's why I said this would be my A++ entry zone, because it swept all this liquidity of the people who did not allow a pullback to occur, and then this happened. All right? So that's why that's like that. And this is the greater time frame because we're on the 1 hour, because I was showing you trend to understand how we're going to play this out. Okay? Now look. Now we're on a 1 hour trend. I can see a clear up. I can see we're on a clear upside trend pattern like this. If I were to play this out, I can literally tick 3 tick wicks like that. Okay. At some point, the greater time frame is going to come in and humble us. At some point, it's going to do it, and eventually, it might come back and pull back this far. Right. It might pull all the way back down to here, as it then holds this uptrend line. Okay. Or it might just come in here and just blow through to the downside. We don't know yet. Okay. So that's the greater trend. Now if we zoom in a little bit further, we can see that the current 1 hour trend is now giving us a slight move to the upside like this. Right? It's kind of going like this, but it actually gained a little bit of momentum. I'm going to assume this is a news day or something. They just wicked hard to the downside here. But it did actually just go wick down to percentage retracement. So look, this is our current smaller move. No, it doesn't matter, stars. It's the same shit. Balance is balance, no matter what. The reason why SPY gap goes down to fill the gaps is because it's really just rebalancing its leg. That's all it's doing. That's why people think it's going to fill the gaps. Like, no, it's going to fill the gaps because it hasn't retraced yet. That's why. Okay? And so that's why gap filling is stupid. You're like, oh, there's a gap below, we got to go fill it. It's like, no, it's only going to fill that thing if it is in line with a retracement and market structure. That's it. If it's not in line with market structure, it's not going to fill the gap. It's just going to keep going.